Okay, thank you very much. Sorry to hear that Dennis got lost. It was very interesting to hear about the Manuka project. This will be now totally different. So very warm welcome to the presentation of Cenit. Cenit stands for Center for IT and Digitalization. So we're going to switch now from resources to software and solutions just around the manufacturing processes in this world. So as I said, Cenit stands for Center for IT and Digitalization. The company has been founded in 1988 in Stuttgart by 5 former IBM fellows that started the company after Dassault and IBM split the CATIA rights, and actually Dassault continued with the software of. We're listed at the German prime stock market since 1998. This was the new economy. Everybody went to the stock market. About 162 million sales with 6.3 million EBIT, which is just 3.9 EBIT. So this was a kind of restructuring year. Now in this role since 2 years, and of course had the chance to do some work, and as you will see later on. Whereas of today, close to 900 employees. So by end of September of the quarter, we were 899 team members in our organization. So we're coming close to 1,000 team members, and you will see that our acquisition strategy is pretty fast and we're fast growing. So what we do is we offer software. I will come to what kind of software. It's proprietary as well as third-party software. Then, of course, we do the consulting and the services just around those software solutions. And this is for the whole production cycle in the manufacturing industry. You will see we have more than 6,000 clients, high-end clients, as well as the mid-market in Germany. So a very interesting market, as well as in France, defense, automotive, normal manufacturing. So these are our core focuses, but I will come to this later on. Just to give you an idea on how our strategy looks like, the purpose of what we're doing is we empower sustainable digitalization. Again, like I said, digitalization of the whole manufacturing process from end to end. And you will see that this is one of our unique selling points of our organization. What we mean by sustainable is, of course, also the environmental focus, but the environmental focus is for us more likely second priority. First priority is profitability for our customers, and profitability means increase efficiency of the production processes, reduce consumption of any resources, reduce, of course, also any kind of pollution, because we can, by the digital twin, already simulate certain processes, and so we're avoiding a lot of bad cuts and other resource use in the production. So this is the main focus, and at the end, of course, this will improve the profitability for our customers. This will enable them to have a competitive advantage as well. Then at the same time, while they become more and more profitable, also to do something for our environment. And what I always say is a good example, you know, one of our customers, Airbus, in former times, as you know, there are some areas where they basically stock the old planes, and the planes are dying there. Nowadays, of course, they're very much focused on copper and other seldom sands and resources of those planes that we identify and that we bring back into the whole production process by closing the loop. So this is our purpose. And of course, our vision is that we become the champion for any process digitalization in the production process. Now, we have, as of today, 5 business units in our organization. And I would like to start with the first one, as you can see, called 3DS Solutions. This is actually the software from Dassault, so a third-party software that we are selling as a value-added reseller. And of course, also including some additional very sticky solutions that are proprietary software of Cenit in addition to our customers. So what it does basically is, and as you can see here, you see an automotive picture, so a car that is designed on the design board, and then what we do is we translate this into the production process, means from the board through prototyping, through any kind of pre-prototyping, and then of course also pre-production by digital twins and other solutions to translate this then finally into the real production where you produce then the car or the plane, whatever you're looking for. Dassault is very strong in this area, as you can imagine. The Dassault Systèmes is a daughter company of Dassault Aviation. Dassault Aviation started, of course, in the aerospace environment, and as of because of this, the product is very much focused and high-end focused on any kind of aviation solutions, which we translated then into any other production processes for defense solutions, as well as manufacturing processes, as well as automotive. Second area, as you can see, is called SAP Solutions. So what we're doing here, although that we're a SAP Platinum partner, as you can see, we're not selling any software licenses of SAP. What we're doing is basically connecting the SAP solution or SAP ERP system, the database, with the PLM database of 3DS solutions, so the Dassault Systèmes. So you might not believe it, but in a lot of companies, there are two databases. They are not talking to each other. And of course, they're all product related. And what makes more sense than just to have a connection and basically analyze if there's a mismatch, where this is coming from, and then solve it. And this is what we are doing. So this analysis software, this interfacing between those two units or products, this is exactly what our business division SAP Solutions provides. 100% full proprietary software that we're using here. Third division is Digital Factory Solutions, which is again a full proprietary solution that is a communication platform for robots. In the production, the robots from KUKA, from Siemens, from Prima, Mitsubishi, and others, they don't talk to each other. They don't speak the same language. And what we do is we provide this platform to make sure that in your production process, the signals as well as collision is avoided, but that the signals are sent when the production process is finished, so that it starts welding and doing any kind of laser cutting. And only after this is finished, it starts painting the vehicle or material that is coming in. So that's one solution. The second solution is what we do in here is in the production digital twinning. So it's really important for our customers to analyze whether the cutting or melting processes makes sense, so that they're not wasting any kind of resources. And this is exactly what we're doing here with our simulation. And the third thing that we do is we have white label software that is running on a lot of robots in the production process, so that we really can do the process and the roboting process and control it in front of the production process. The fourth division is called Enterprise Information Management. So what we do here is based on an IBM product called FileNet that is now more than 30 years old, but still one of the best document archiving solutions that you're going to find in the market. So what we do is here, we archive any kind of documentation, we structure it in the production process as well as in financial insurance businesses. So this is where it actually comes from, but we have translated this now into the production processes. So any document, any manuals, any testing documents that are established during this production process, they will be archived and then of course connected to the database of SAP as well as to the PLM system to close this loop, so that you really now, if you look at the first division, we start drawing a product, then we combine this with the SAP ERP system to check whether we have the parts, whether we have to order any parts. Then we're down in the production and we produce the product, and finally make sure that we have all the papers right, and of course can track this product, especially as you can imagine in the aerospace business. it's for more than 30 years that you have to track and make sure that you have all kind of records updated on the latest and greatest for your maintenance work, as well as when you're selling those parts. And then the fifth division is basically providing services for all these 4 divisions. So these 5 divisions in total have at the moment more than 6,000 active customers, and those customers are supported by us all over the world. And you will see later on in which segments they are. The 5th division, Digital Business Services, is doing about 90% of the services for Airbus only, because we don't have enough team members to focus also on the other customers. So it's a nice problem to have at this times. But of course, we have to expand here to provide those services because there's a high demand also for other customers. But again, it's chicken and egg. Whenever we have new team members, Airbus is providing us new orders, and of course, then we're staffing and we're filling in. Now, I spoke about the core industries that were present. You can see as a German company, a German-based company, we're coming from the automotive industry. So this includes any kind of car manufacturers, as well as all their suppliers, as well as nowadays, I have to mention this, vehicles that are armored and maybe running on chains. So this is included in this segment. Then the second largest portion, with 21% of our turnover in 2022, is the manufacturing processing. This includes anything that is not automotive and not aerospace. So any production of screws, of any other solutions that are required in this world. It also includes, again, of course, also manufacturers of any kind of defense solutions, so guns and things similar to this. And then, of course, the aerospace business, as I mentioned before, we have a very strong origin with software from the SO that is coming from the aerospace business. And there, of course, we provide any civil as well as military solutions. So it's planes, missiles, and other solutions, rockets, of course, also for companies like IIF Aerospace that is really doing satellite transport into the aerospace. And then, as you can see, financial services with 8%. This is coming from the documentation. As I mentioned before, the solution was established to structure documents in insurance companies or for insurance companies, as well as banks. So this is why we have here about 8%. And then you see the other remaining areas that we entered, but honestly, we don't speak their language. So the solution is good for those segments. It's just, you have to translate this, and you cannot sell when you're coming from the aerospace business and explaining a customer in the health industry about a plane and what it can do. You really have to speak their language, and this is why we also will do a lot more acquisitions in future. This is just a brief overview of our company. So what is our strategy? I mentioned already sustainable digitalization. What does it mean when you see this temple? These 5 yellow areas here are these 5 business solutions, and we want to make sure that we have a very strong temple, as you can see this here, built where those 5 pillars hold the roof on the same level. So we don't want to be dependent from any third-party software. We don't want to be dependent from any customer, as well as not from any segment. And that's why we're trying to expand those 5 business solutions so that they really become equal in our revenue. As of today, 2/3 of our revenue is still with the SO or around the SO, and we want to make sure that we expand the SO as well as the other 4 divisions the way that this is very similar. So you can see here, these stars show the dependency on the SO on one hand, and on the other side on Airbus. And these are the areas that we have to make sure that we build some parachutes, that the other 3 areas hold this, so that the roof is really steady and our organization is not depending on any other solution. Now, how do we want to get there? You see here as a starting point, when I started, we were at about 150 million. By the end of this year, we will be at 180 million already. So within 2 years, we've done a jump of 40 million that fully consolidated, because we've done partly consolidation over this year with our acquisitions. This will be in the area of about 200 million. So we added 60 million revenue, as well as, of course, a nice EBIT portion. And as you can see here, the idea is to jump from 100 to 150 million with the Dassault business. And then, of course, from 15 to 50 million with SAP solutions, 10 to 25 with DFS, and 14 to 50 million to enterprise information management. You see here that I tick the box because we've done acquisitions, and within this last 2 years, we're at this time already at 45 million revenue. And the idea is that until end of 2025, we achieve in total this 300 million. And I'm sure that the team members will achieve this 50 million just by organic growth. So what is the idea? As you can see here, it's a 10% EBIT margin by organic growth that we would like to achieve. How can we get there? It's by performance increase on one hand, and then it's of course also the inorganic growth, where we would like to do acquisitions of companies that have an EBIT that is better than 10%. The reason being is we still have to focus with our own organization to get there. So if I call it Cenit Old, and the new organizations should be already well-running organizations. So far we've done this and we kept also this expectation. And the idea is we're not good in restructuring, and that's why we want to focus on getting good companies and becoming a club of entrepreneurs for this team. Now and then, of course, in 2024 and also 2024, we will go for synergies. We will review whether we have within this acquired companies certain synergies that we might go for. I'm not a big fan of synergies, to be honest. I prefer to have small speedboats and only where it's very obvious. So we have 4 offices in one city that we get this synergy. But I prefer to have 4 marketing teams that are focused than having one large general marketing team that doesn't really come to grips and can address the issues of the respective company. That's why, and I think this is a little different to what you hear from other companies, we do not integrate any of our acquisitions. We only onboard, which means we have 5 portfolios, sort of portfolio business leaders. As you've seen before, they really changed their role from a business unit leader to now a performance a leader of this portfolio leader. And this is how they're gonna change their role in future. This is driven mainly by my background. I was for quite a while working for a Constellation Software, a Canadian company that is doing this very successfully since many years. And of course, we're trying to learn from this and to take on some of the learnings that I had during this time. Now, what is our goal? Like I said, starting point for me, we're 146 million until 2025. So in 2 years, we want to be at 300 million. Like I said, beginning of next year, we'll be at 200 million. So this year, 180 million sales. And in a fully consolidated mode, this will be then the 200 million as a starting point for next year. We will do further acquisitions, and I'm pretty confident that we'll get to this 300 million. Then the second driver is, of course, we want to be at 8 to 10% EBIT. As I mentioned before, my starting point with 3.9% EBIT margin, which is pretty lousy for such a business. But I think we have been a dormant beauty, and there's a lot of potential in this organization, so that we will achieve this goal by getting to this 8 to 10%. And how can we get there? Number one, as you heard already, inorganic growth. That's one hand, buying good companies, but on the other hand, of course, making sure that we change our business, reducing the dependency from our third-party suppliers, and making sure that we are selling our proprietary solution in our organization, which of course provides a much better margin than just reselling software licenses from other companies. Just to give you a very first glance on the first 9 months, where we have been, you see here 15.1% in sales, an increase in the first 9 months. And the EBITDA, as you can see, also did a major jump. The reasons were, of course, we could, after 11 years, really start the growth of the organic revenue. So the organic growth started in the PLM sector to 7%. over the past 11 years, we were 2.1% CAGR. So you can see, like I said, a dormant beauty that we have to wake up, and there's a lot more potential. And then, of course, the other reason is because of some of the acquisitions, we have in the AAM sector an increase of more than 60% in sales. And then, of course, you know, the acquisitions that contributed with 4 million just in this 9 months, because the other AAM acquisition has been done in 2022 that I will come to. So you see, we're really jumping up. The EBIT is also doubling almost, so 78% increase. EPS went up. And like I said, reasons are focus on performance, increasing organic growth, and of course also inorganic growth. Coming now to the inorganic growth, the path that we have done so far. Like I said, I started in 2021 at the end. So 2022 was my first year. And as you can see here, we acquired 3 companies, ISR for the documentation segment, so AEM segment with 205 employees, Choristo for the SAP business, and Magic for the 3DS business. And then, of course, in 2023, we continued our path again with 3 acquisitions. I'm not a big fan of doing more than 2 to 3 acquisitions a year because, of course, we have to make sure that we get them onboarded the right way. The other question is, of course, the financing. And the third one is, of course, making sure that we keep also our culture, because we're not a private equity company. We focus on digitalization, but we identify certain loopholes that we have to fill in region-wise, as well as technology-wise. And then, of course, also, this is the cheapest way of getting team members on board. You see here the MIP business that we acquired, highly specialized company on data analytics for the documentation segment based in Munich. Then in Berlin, we acquired the company called P with 30 employees. And finally, 12 employees in Austria, based in Vienna, with the Active Business Consult, which of course allowed us now really to enter the Austrian market, where we haven't been present in the past with our own team. And of course, there's more to come. You can imagine 2024, we have something in the pipeline. I assume that within the next weeks, I will announce the next acquisition that will be good for and valid then by the 2nd of January of 2024. So our path continues, 3 per year. And for next year, it might be that we might exceed this and maybe end up with 4 to 5, so that we can continue our track to 2025 with 300 million. Well, just giving you an idea on, because this is one of the questions that comes up pretty often, how does your shareholder structure look like? And as you can see here, one of our main shareholders is a company called Prime Pulse. This is the former family of a company called Cancom. So the founders sold their main shares and founded Prime Pulse as a kind of private equity company, investment company, and they identified Cenit as a target. So they entered 2.5 years ago, changed the supervisory board, and then, of course, also the managing board. So this is one of the reasons why I'm in here. Then MainFirst Stiefel Bank, their fund is invested with 8.3%. LBB Asset Management is a local bank here in Stuttgart or in Baden-Württemberg in our state here. And then Otis Capital, a British London-based company, an investment company that is in since last year, October. And then, as you can see, very high free float. So you're more than invited to join us on our journey to 2025 with the 300 million. And then, of course, I hope to continue and to grow like Constellation did, so that we have the same success. What you can see here as well, the share as of today, this morning when I looked at it, it was 12.40 euro. And as you can see, the analysts see our share in the area between 18 to 20, 90 euros. So I think it's a good moment to step in. Most of you are familiar with the German mid-market and small cap market, and you know that at the moment a lot of capital is going out of this area. So this might be the right moment really to come in and take opportunity in getting for a good price an excellent share with an excellent future. So again, I think that Cenit is on track and will achieve their goals in 2025. The guidance for this year is 180 million in revenue and 9.5 million in EBIT. And as of today, I'm very confident that we will get to the target line and win this race. So that's it from my side, and I would say I'll leave it up now to you for any questions. Mr. Greifenberger, it's up to you now.
Thank you very much. Excellent presentation. Yes, everyone is welcome to post questions in the chat or the Q&A functions. Currently, there are none, but I have quite a lot of questions, so be prepared. So maybe coming back to the 9 months results, there was the consulting and services segment saw a significant increase of about 40%. So how was this achieved?
There were two reasons. Reason number one is a major acquisition in 2022, which is the company called ISR, which we consolidated 7 months last year. And then this year, of course, had on our figures the remaining 5 months. So that's why you see this major increase. They are mainly focused on consulting around the documentation solution. So it's really this fourth division that they're in. And the second division is we had a lot of consulting and supporting services in the area of digital business solutions, which is the Airbus business, and basically driven by Airbus, because as you all know, they are struggling in getting the planes produced. They have a very nice problem. They have a lot of orders, and they can't really catch up in getting them in time. And since we are one of the key companies and we're a tier one supplier for Airbus, you can see a small company, to be honest, like Cenit is, with close to 900 employees and about 80 employees only in this area. We are so key to them that of course they are placing a lot of demands and a lot of consulting work with us. So that's why we exploded in this area as well.
Excellent. And in terms of financial performance for 9 months, what factors contributed to this increase in gross margin and generally in the margin?
I mean, number one was, of course, we managed to wake up the Sleeping Beauty, like I mentioned, so the organic growth with the existing team. So when I joined, I saw that the sales as well as service performance, the utilization rate was not up to what I'm used to. So that's why we really increased this and worked on this and improved this. So the existing team managed to generate much more revenue, and of course also then a growth rate, as you've seen now, of 7% in the PLM sector. And with some specialties like in France, we had 10% growth rate. In other segments, we really had outstanding growth rates that were flat for the past 11 years. So this was one reason that of course allowed us for this growth rate, and then finally paying into a much better EBIT margin. And the other reason is of course the acquisitions. So by doing these acquisitions, of course, we get companies, good running companies on board that have already their business. So their team is already very well utilized, and on top, this improves, of course, then also our EBIT margin because they already have a good EBIT margin. And then there's a third factor. When we do these acquisitions, we'll look where there are certain loopholes in our scope. And by these cross sales that is ongoing now with these new companies, as well as we've started now since 2 years, a cross sale between these 5 divisions, because in former times there were silos. Now we managed really to get them together. You can imagine that this unleashed a huge potential, and this is what you finally see in our figures, and this is why you see this increasing numbers in 2-digit increases in EBIT as well. Then of course also in the revenue growth.
Okay. So we have just about a minute left, and the guidance for 2023 was confirmed. But as we approach the year 2024, what are the key challenges that you see for the next year, and what specific events or factors could potentially lead to a revenue explosion?
So challenge number one is, since we're based in Germany, the German economy is, I would say, struggling. I don't see it as bad as all the other companies sometimes do, or some other managers do. I'm very optimistic. We have a lot of potential in those segments. The German industry has always been very strong. We have to make sure that we overcome this German downplaying and bad mouthing that we typically do. I think it's not that bad as everybody says. We see a lot of potential, and we see a lot of segments that we're not in. So what are the challenges for us is on the organic growth side is finding team members. So it's really still a staffing issue, the war for talents, as you know. I assume that this will slow down in 2024. So it is already now becoming easier because some of the companies are unleashing a lot of their staff team members. So I'm very optimistic on this one. And the other one is, of course, then entering in those segments by speaking the right language. So there's still a lot of potential. And then, of course, also that's the third challenge, finding the right and good targets for our acquisition strategy to make sure that we can fill in some gaps that we still have in our portfolio, so that we, by the end of this year, 2024, have a kind of consolidated revenue that will be in the area of 250-60 million, so that we really can achieve this 300 million. But to be honest, I don't care whether we end up at 260 or 280 million or 310. I think the key issue is for me the 8 to 10% EBIT, and this is what also our shareholders are looking for. So this is what I'm targeting for, to get to this 8 to 10%.
Thank you very much. The time's up.
Great
Great presentation.
Thank you very much.